All right. Yeah, I think this is good. Okay. All right. So, hey guys, welcome back to our Phillip Trading Podcast. I'm your host for today. My name is Jun Hang, and I'm the dealer here in Phillip Capital. Now, before we start, please take note that this presentation has not been reviewed by the Securities Commission Malaysia and is for general educational purpose only. It's not an invitation to buy or sell any investment product. Hence, the speaker and PCSB are not liable for any financial decision you may make based on this content of this presentation. With us today, we have a extremely experienced speaker, Mr. David. How are you today, David?
Yeah, I'm good.
Okay, so now before we start, let me just bring you through a quick introduction to our esteemed speaker for today, David Ng. David Ng is currently a full-time proprietary trader with Iceberg X and Berhad, a local proprietary trading firm based in KL. He has done extensive research and is well versed in the commodities and indices markets. He currently trades the Malaysia Index and crude palm oil futures market. Currently, he holds a CMT designation as a chartered market technician. Previously, he led a young and dynamic team with a prominent local broker to promote futures and derivative instruments to the Malaysian public. He conducts regular public seminars and seminar on topic related to futures trading, and he has aided individuals in starting their trading journey. In addition, he also provides frequent market commentaries to local media like The Stars, Business Time, and The Age in that role. So, what an interesting speaker we have with us today. Well, I won't hold too much of your time. Let's get straight to the content. On to you, David.
Yeah, thanks, Johan. So I prepared a couple of slides, just to for just a preview session, for what I'm gonna be speaking on the 21st of May. So just allow me to share that content. Um, yeah, Johan, are you able to see the slides?
Yes, yeah, I'm able to see the slide.
Okay, that's great. Yeah. So I thought of like giving the audience, just a bit of taste, a teaser of what I'm probably going to be sharing on the 21st of May. So when you talk about commodities, I think this year there's a lot of themes going on. For sure we have one that is at the front of our mind is Trump tariff and US and China trade war. So obviously this is going to have a major impact in the agriculture space. So if you've been trading the CME agriculture, I think this is the year where we're going to witness a lot of volatility, very news driven. You're going to have a lot of sleepless nights. But again, if you have the right strategy, if you manage your risk well, which I'm going to discuss quite thoroughly in the seminar webinar session. I think you can overcome some of the nights. But having said that, I think this is the year where we're going to see a lot of volatility. It's not only confined to agriculture space. There's so many other any other asset classes as well. Whether you talk about equities, you talk about bonds, all these asset classes are having a big impact because of this ongoing U.S. Trump tariff and obviously U.S. and China trade war that's actually quite persistent. Now. I think trade tension, when you talk about commodities, grains in general, there is always, as long as this trade tension is going on, it's going to affect grain prices. Now, grains is usually referred to corn, wheat, and soybean. These are all major commodities for the US market. So, if you are trading, especially on the CME agri space, these are the three key products that probably you'll be accustomed to, and probably that also be some of the products that you'll be currently trading with as well. Now, I think with any commodities, there's always these seasonal tendencies. When I mention seasonal tendencies, there's always a period of time where, there's certain periods where prices tend to be stronger. There's also certain periods where prices tend to be weaker. So I'm just going to share with you different characteristics of each of these, grains, in detail, in the webinar. But as a trader, we I think this is important too. If you understand seasonality, you understand patterns, we understand seasonal tendencies, then we are able better to position our trades accordingly. So for example, towards year end, we tend to see, or towards the middle of the year, we tend to see corn and soybean prices tend to be weaker because of the supply. There's the anticipation of supply coming onto the market, usually in the third quarter for the US market space. So I'm going to discuss more of this in the webinar session. So hopefully you can gain some insights on actually how to time or how does seasonality plays a role when it comes to your trading. Now, I think with any fundamentals aside, there's always a need to look at things technical. So I'm just going to share with you some of the key trend trading strategies and tools that you can use and employ, especially when you look at grains market. Now, I just want to show you a chart, a bit of teaser. Now, you look at it, majority corn and soybean, these two key products in the US agri space seems to be showing you a lot of weaknesses of late. Corn especially, I think is very difficult to break the $5 mark. And in fact, I think even the 450 US dollar per bushel price level seems to be also difficult to hold. And indeed, I think corn, as I will share with you certain key fundamentals to look at, it's actually pointing to you that the market is still on pretty much a weaker phase. So when you employ trend trading strategies, there's certain once the direction has been emphasized, there's certain ways that you can actually navigate your entry and exit strategies accordingly. Now, soybean, on the other hand, seems to gain a bit of strength because obviously there's some fundamental factors, strong fundamental factors, which I'm going to share also on that day. That's actually supporting the market. But the key question is, can it still hold the market, or rather, can the market still see substantial rally? Judging from where we see right now, from the technical point of view, it seems to be the market is consolidating, and in fact, there's also sign of weaknesses or pocket of weaknesses. So it's obviously an opportunity for you if you're able to use trend tools to identify your entry and exit strategies. Now, wheat is a sort of like under-mentioned. Now, obviously, 2 or 3 years ago, if you can recall, the Ukraine and Russia conflict was actually very serious. It was so intense that I think wheat, for the first time in history, they actually witnessed 3 consecutive days of limit highs. We have not seen that in that type of markets. But again, when geopolitical tension is also a very strong factor that drive commodity prices, when you have such scenario in play, normally you expect this kind of movement. Now, so wheat, on the other hand, you look at it technically speaking, it's still quite consolidation phase, but it's more towards the downside. It's also justified by fundamentals, which I'm going to share in more detail in that webinar session. Now, Trump is a very unpredictable factor this year. Now, having said that, US and China, despite the intense trade war we are seeing right now, you must acknowledge that agriculture is a key product for the US market. And I don't think Trump will want to spoil it. I think if he's going to go with China with a deal, if you read the news wire that this morning, there's a talk that US and China probably going to reduce their trade tensions. And I think one of the key items is definitely going to be US agriculture, because agriculture is an important economy for the US market. And it's also, you look at it, farmers in general are those individuals that supported Trump's political objective. So, I think, Trump would not want to, would not want to deviate too much, or don't want to make these folks unhappy. So I think there will be certain key trade policies that is highly watched, especially when it comes to the agriculture space. Having said that, I think that eventually will probably drive prices, and it will create a lot of volatility in the market as well. But if you just look at the stats, I think it's very clear. China has been buying a major buyer of US agri. And obviously, this trade war is happening and is creating a lot of tension. Now, my view, which I'm going to share quite elaborate, is that eventually, I think if you look at US and China may strike a deal when it comes to the US agri space. And I think that hopefully will actually propel prices, US agri prices even higher. But watch out, I think this trade thing is always something that is constant and is actually very persistent. Now, I don't want to talk too much during this preview on looking at how do we identify or gauge market sentiment. Now, I think one of the key things, if you are trading, US agriculture space, especially on CME exchange, you do know that every week we have a lot of reports. And I think one of the key report that's worth to mention and worth to look at is we call it the Commitment of Traders report, because basically these reports identify what is the net positions in the market. So if you attended some of my previous webinars, I always emphasize this: if the market is having a lot of net positions on a single side, be it whether it's net long or net short, it tells you something. It tells you how the market or rather the sentiment of the market behaves. We're going to delve deeper on how we interpret this report. And in that way, in a sense, it also helps you to make your trading decisions accordingly. So this is basically the COT report on corn. You can clearly see why corn has been suffering in terms of prices. Why the every rally is actually a short position or a selling position or selling opportunity, because you can see the net positions from positive is actually slowly declining. So it's telling you that a lot of those people holding long positions are slowly coming off the market, which is coincide with the decline in corn prices. So COT report is a very good report for you to gauge market sentiment. So these are some of the areas that we're going to cover. Hopefully you are able to tune in, you gain some insights. Then hopefully after the session, you are able to kickstart your journey into the CME agri space. But keep in mind, commodities, whatever, people always have this misconception that whatever tools that we use or whatever analytical tools that we framework that we employ when we look at agriculture trading can be also duplicate in other type of asset classes like equity space or whatnot. But honestly, that is very different. Commodities in general it runs on the different dynamics altogether. So keep that in mind. I think hopefully you guys can tune in and I can share with you certain insights on how to really crack the code with the CME agriculture futures. So over to you, Johan.
Wow, I think that was such an insightful session from David. Thank you, David. So yeah, uh, for the for those that are interested to know more, you can join David's full-length live webinar on the same topic on Wednesday, May 21st from 8 p.m. until 9:30 p.m. Also, you can utilize the insight shared by David by gaining exposure to CME market with Phillip Capital for as low as 4 USD. All right. For information, you may visit our website, phillip.com.my. Thank you all for tuning in and thank you, David, for your time.
Yeah, see you on the 21st.
All right.